In April of 2025, we've seen tremendous stock market volatility since April 2nd when President Trump announced Liberation Day. I think it's important, though, to compare the volatility in April 2025 to historic volatility to really know what we're dealing with as far as a stock market investor. Stock market volatility, what's really happening? So the Standard & Poor's or S&P 500 index is an index that includes 500 of the largest publicly traded companies in the U.S. Think of big name stocks we've all heard of, Procter & Gamble, Microsoft. So here's the performance in the index from the 1st of April to the 25th. And you can see that we've had great volatility and that as of April 25th, the market's down slightly over 2%, 1.5%. So that's where we stand as of the 25th. And since Trump announced his Liberation Day, the market was at 56.70 that day. As of Friday the 25th, it stands at 55.25. So for that period of time, 4.2 to 4.25, it's a 2.6 decline. Now, that's a fair amount of volatility in a short period of time. And then I mentioned that it doesn't help that wild market swings are all over the news and the media. They drive clicks and views, that kind of news. You see a lot of breaking news announcements. It's not a surprise. So here's my point. What's a level of volatility that you could think of as normal or expected based on history? So Seeking Alpha, I highly recommend this site. It has a great list that shows the S&P 500's total return from 1928 to 2015. And the total return, that is how much are you making from stocks, assumes that capital gains, selling a stock for a gain, and earnings are reinvested in more stocks. So that being said, here's the chart. From 1928 to 2005, green is gains, red is losses, and you can see that we've had pretty substantial gains in certain years. We've had pretty big losses. This is 2008. We've had the tech boom. We've had huge swings and volatility historically going back 80 years roughly. So in more detail, stock market volatility has been around for 100 years. If you're a stock investor, large price swings just come with the territory. So why put up with it? In other words, what's the gain? Well, the average annual return in the S&P 500 is about 10%. Considering all those ups and downs, it averages out over 80, 100 years to be 10%. And it is tough to find that long rate of return in other investments. So the good news is a 10% rate of return compared to investing in bonds, investing in real estate, investing in commodities is a pretty good return. The downside is you have to be comfortable with the volatility. So I wanted to say those things. So if you're an investor and you've got a 401k and you're seeing this kind of news, you understand what's going on. And as always, I recommend you discuss this with a financial advisor. We've seen huge stock market volatility in April of 2025. And as we've seen, it's happened in other periods over time for 100 years. So you have to balance putting up with stock market volatility with the ability to earn a 10% roughly rate of return over the long term.